Hey everyone, and welcome to this new video. Today we're going to be taking a look at the results of our February Strategy of the Month contest. So we're going to be seeing which strategy won and then present a selection of the most promising strategies that we received from the participants. We'll also try to provide some trading insights by analyzing what logic underlies these strategies, in which markets they work, and how they perform. Now, just as a reminder, the Strategy of the Month contest is reserved for Ungar Academy students only, and each month they can participate by submitting a strategy and competing for a chance to win a €1,000 Amazon gift card. Very cool. One of the coaches at Ungar Academy here, and as always, before we start, I invite you to please leave us a like to this video and subscribe to our channel, please, by clicking on the bell so that you'll always be updated on the release of all our new videos and new content. Okay, so now I'll just first show you a couple of excellent strategies that didn't win but still impressed us. And finally, I'll show you the winning strategy of the contest, which is really a blast. So let's go and start immediately with the first strategy that I want to show you in this video. This is a strategy for crude oil futures. Now, it's an intraday breakout strategy. It tries to follow downward or upward movements. And what's particular about this strategy is that all trades are closed at the end of the session where the entry was made. Now, as you can see from this chart, we try to follow the movements, in this case downward, entering at the session's lows, and then exiting at the end of the session. You can also see that these signals, they don't always produce profitable results. Indeed, we can also have false signals. And here we go long, so we buy at the highs of the day, and the price then reversed. Anyway, let's see what the results and the performance are. Okay, as you can see, the equity is outstanding, and I guarantee that this is very good for the simplicity of the system. Indeed, by riding trends in intraday mode, we managed to get average trade values that are very high for this type of strategy. We come to almost $180 per trade without fees and commissions. But we already know that this number is far above any trading cost. Let's see, we've made about 750 trades since 2010, and the balance between long and short trading is very good. Now, before moving on to the next strategy, let's look at the year-by-year performance and see there is no bad year. Yeah, certainly there are years where the average trade is quite low, such as it was in these 2 years, so the trading and commission costs might reduce that gain, if not take it slightly into the negative. But we see that the strategy's consistency of returns is really very interesting, with even a very large average trade in the last few years. 2021, 2022, with an almost $300 average trade, and an awesome start to 2023 with an almost $400 average trade. Right, now let's look at the second strategy. This is also a breakout strategy, but for natural gas. Now, those of you who follow the markets, you would have noticed that recently this instrument has increased significantly in price. Indeed, the price went from about $3 to $4 to over $10 to $11, and then it dropped back down to as low as $2 to $3. So yeah, a market characterized by very abrupt movements, especially over the last period. And again, riding the bearish and bullish movements of the market, it could be very beneficial. Now, unlike the strategy we've already seen in crude oil, in this case, there are no closes at the end of the session, but we do keep our positions open for more than 2 to 3 sessions, and so that we'll stay longer in the market. The strategy follows the market trends, but filters the trades based on the ADX indicator. Now, ADX, that's a widely used trend indicator among traders, including systematic traders. We have already discussed it in a previous video, and we'll give you the link to that video. All right, now let's go and look at the performance of this strategy. You can see the equity is phenomenal here as well. Notice that there is an increase in performance in the last period, just because of the high volatility that there has been in this market. I'd just like to also analyze with you the chart of natural gas. You can see a very sharp increase in prices, followed by a very sharp decrease in prices. Again, let's have a look at the average trade of the strategy, which is over $180. And clearly this value is perfect for covering all the costs associated with trading this market. And the trades are numerous, over 1,200 always from 2010, and the strategy's returns are excellent with only 2 seemingly negative returns. One 2023 where it's only made 3 trades so far, but I guarantee plenty of time still to recover. But I just wanted to point out the excellent year of 2022 in conjunction with the sharp rise and fall in prices. Over $45,000 with an average trade of over $1,300. Now, finally, I want to show you the winning strategy of the February contest. It is Stefano's strategy, and it's a strategy on the NASDAQ futures, the US index that represents the 100 most capitalized tech companies in America. As with the last strategy seen on natural gas, this strategy is also a multi-day breakout strategy. So we'll keep our positions open for more than one session. Now let's analyze the performance because it's truly incredible. The strategy has a rising equity curve, especially in the last part, with a minimal drawdown that is very low for this type of strategy. Indeed, in the last period, we reach a drawdown of over $20,000, which is more than acceptable for the type of system. The average trade is very capacious. Starting in 2010, we've had an average trade of over $450 with 1,000 or so trades. 1,000 trades, of which we have over 600 long and 300 short, so more or less 1/3 short and 2/3 long. And that's because despite the nature of the market, which has been going down rather than up lately, trading on the long side still turns out to be the more efficient. Of course, if we analyze the equity of the short trades, we do see solid gains, especially in the last period. On the other hand, the long side has continued to perform very well, despite the slight downward trend that occurred in the last period. And let's also look at the returns year over year, which are really very interesting. Indeed, in the last 3 years, 2020, 2021, and 2022, we're around $100,000 or more. In 2023, the strategy has already yielded nearly $13,000. And these numbers don't consider trading costs, mind you, but I assure you that if it isn't $100,000, well, it's a few $1,000s less. So that still leaves phenomenal results that beat the buy and hold of the index, hands down. So, well done. All right, if you want to learn how to create independent trading strategies like the one you've just seen, well, you've come to the right place. While learning, you too can enter in this contest, dedicated exclusively to Unga Academy students, for a chance to win a $1,000 Amazon gift card each and every month. For any additional information, I invite you to please go and click on the link below this video. That'll take you to a page where you'll find some very valuable resources. From there, you can sign up for a free presentation by Andrea Unga, or go and get the best-selling book, The Unga Method, covering only the shipping costs. And you can also go and book a call with a member of our team to get some free strategic advice. And finally, if you haven't already, I'd like to remind you to please leave us a like and subscribe to our channel so that you'll always stay updated on the release of all our new content. And with that, congratulations again. Thanks for your attention, and we'll see you soon. Bye-bye.